All right, so I'm sharing it with you. Yeah. So here we go. Now we are going to talk about sources of business finance. Also, we have discussed a bit about them, but mainly in the last class we discussed why do businesses need finance? Okay, and we actually differentiated between two of the types of expenditure businesses have, that is capital expenditure and revenue expenditure. All right, so now we'll move on to the options available to businesses to get a certain amount of money to meet their expenditure. Either it is a capital expenditure or a revenue expenditure. So let's have a look. Now, internal sources of finance. So before I talk about it, because you are actually doing it in the class as well, so can you tell me what is an internal source of finance?
Internal source of finance is basically which is obtained within the business itself.
All right, okay. So it is a source of finance when you actually are able to generate a certain amount of money from within the business. Remember, whenever you are defining something, you should not use the same word which is there in the question. Like, for example, if there is a question, define internal source of finance. So you should not write that you are able to generate finance from within the business. Now, this is somewhat wrong. Why? Because you are not actually explaining the term finance, right? You have, like, if there is a question internal source of finance, so you have explained internal, fine, that something which can be arranged from within the business. But what is that something? If you use the word finance again, it's there in the question. Examiner will not give you the mark, the, the, the second mark. So you'll only be getting 1 mark out of 2 if there is a definition question about it. So you will be saying that internal source of finance is an option available to a business where a certain amount of money can be raised or arranged from within the business. That is how you will be defining that. Okay, because you have addressed the word internal as well, and you have addressed the word at the same time finance as well. All right, so you know about it. Now, let's have a look. The different options which are there in internal sources of finance. One is retained profit. So, what is retained profit, Hanna?
So retained profit is the profit which is kept in the business by the owner, and then it takes their shares of profit as well.
All right, okay, great. Let me just elaborate you a bit more. Um, let's say business earns a certain amount of profit, right? A certain amount of profit has been earned by business. Now, this profit is not kept by the business. Okay, so what you have to do, you have to pay a certain amount of tax on it. Remember, tax. Okay, and after that, what do you get? You get actually. Let me.
Revenue.
Yeah. After that, you actually get profit after tax. Remember, you earn the profit, okay, and you have paid tax on it to the government. So now we call it profit after tax. Okay, this is what we call profit before tax. Okay, this is also called net profit. Okay, you must have studied that in accounting as well. The net profit or the profit for the year is actually called profit before tax. Okay, so you pay tax as a business, so you get profit after tax. Now it is divided into two portions. Remember, profit after tax. One, which is actually distributed among the owners of the business. And we call that part of profit as, let me use a different color for that. This is dividend. Remember, dividend is actually has come from the word divide, division. So it means you actually divide the profit, okay, and distribute it among different owners based on their level of investment in the business. For example, if one of the owners has invested 10% of the capital in the business, then 10% of the profit will be given to that particular owner. And in that way, the profit will further be distributed among other shareholders as well. I'm using the word shareholders because shareholders are also the owners, but we use this term when we are talking about a public limited company and a private limited company. Otherwise, we use the word either a partner in a partnership or sole trader in a sole trader business, you know that, or simply the owner. So shareholders are the owners who are there in private and public limited companies. So why I'm talking about that? Because when we say retained profit or dividend, this only comes in private and public limited companies. You know that because in sole trader business and in partnership business, whatever profit which is earned, it is distributed among the owners. Nothing is left for the business. Remember, business does not keep any profit at all. In case of sole trader and partnership, do remember that because you may have you might see a question distinguishing between these types of business and how they or what do they do with the amount of profit they earn, or how is it distributed among the owners. All right. So you at some part of profit, not all, some part of profit is distributed among the shareholders, that is the owners, and we call it dividend. And the rest of the profit, which is kept by the business, we call it retained profit. Remember. So it means after paying taxes from the profit, first you pay dividend, right, to the owners, and whatever amount is left, you call it retained profit. Hamna, is it clear?
Yes, sir, it's clear. And Manha
Yeah.
has
Okay.
also joined the class already.
All right. Yeah, Manha. Okay. All right. Great, Manha. I believe that there was some issue there. Otherwise, you are very regular and you are right on time every time I have a class. Okay. All right. So retained profit. Now you understand. So it means if we define retained profit, we say that a certain portion of profit which is kept by the business, right? Now, kept by the business for what? For further expansion or for some future uh, expenses. So they keep it so that if it is needed as a source of finance, they can use it. So retained profit is readily available. That is the plus point of retained profit. Okay, so it is available all the time with the business and they can use it anytime. And one of the way to use it, like for example,
Sir, in
yeah,
retained business, we do not need to pay back the loans or the money we took, right?
absolutely, very good. You do not need to pay it back. Again, that is a advantage of retained profit. So you keep on spending it, and there is no worry that you have to pay it back as well. And there is no interest needs to be paid as well. In case of borrowing, when you borrow money from the bank as a loan, you have to pay back that amount along with the interest rate. So you have to pay more than the amount you borrow from the bank. But here, this is not the case. You do not need to pay anything. All right. So, but there is an issue there with retained profit as well, and that is retained profit might not be too large. And do you know why it won't be too large? Anyone? Manha and Hamna? Any idea?
No, sir.
Okay, all right, no problem. Why? Because I just told you that retained profit is calculated after paying dividends and taxes, right? So you have paid taxes to the government as a business, and after that you pay dividends. Let's say if you pay smaller amount of dividends to the shareholders or the owners to get high amount of retained profit so that you can use it in future. So what will happen? Your owners will become unhappy. They'll say, okay, the business has kept majority of the profit, a big chunk of the profit themselves, okay, or itself, okay, and we have been given a very small amount of profit as a share. So they won't be happy, and you know that you cannot make your shareholders unhappy. After all, they are the people who have invested money in the business, right? So that is one of the issues that if so that's why it normally is not a big amount because if you try to increase it, you have to reduce the dividend now, obviously. When you once you reduce the dividends, given to the shareholders, you can increase the amount of retained profit. So you can't do it, because then shareholders will be unhappy, and you know that they might withdraw their investment from the business. So that is very damaging for the business as well. So this is one point. Secondly, think about if you have started a new business. Okay, you are setting up a new business. Will there be any retained profit there?
No, sir.
No, because retained profit comes once you earn profit. Okay, so you keep it with you, right? Next year, you again earn profit. Again, there is some retained profit. You keep it again with you. Okay, all right. So there is actually a term used in business, reserves. So what you do, you keep the retained profit in reserves. Okay, so and you keep accumulating that, and whenever you need it, you can use it as a source of finance. But if you are running a new business, obviously you have not yet earned any profit, right? So how can you have a retained profit as a source of finance? So we can say this option is not available for new businesses, right? So this is also a disadvantage. Although we will be talking about the advantages and disadvantages, I am discussing it right there because we'll be quickly going through it afterwards. Sale of surplus assets. Can you tell me what does it mean when we say surplus assets? Any idea?
Sir, surplus assets are the assets that are currently not in the use of the business and we are not needing them.
Oh,
So what we do is we sell them in order to get finances.
all right, great answer, Manha. Very good. Yes. So we can say sale of. We can use another word for it, idle assets. So which are not
Sir, does redundant buildings and surplus equipments involve? Like, are these
absolutely
example?
very right, Hamna. Absolutely. If there is a building which is not in use currently, so this is also a surplus asset. And if you think that you are not going to use it in the near future, you can sell it out and can raise finance from it as well. So, but again, you need to be very, very careful. If you feel that there is a building there which is not in use, there is an equipment or machinery there which is not in use currently, and if you sell them, for example, and all of a sudden demand of your product increases, whatever you produce. So now you do not have that extra or surplus assets available which you can use, right? Now you have to buy it again, and now it might be more expensive for you because when you bought that asset, it was quite cheaper at that time. But now if you're buying it again, it might be expensive. So you need to be very, very careful that if there is an idle asset, okay, so are you sure that you are not going to use it in a quick time? Like for example, if you have a strong belief that okay, it will be used after a year or maybe 6 months or so. So it's pretty much fine, you can use it. But let's say if you sell your asset and soon after a month you will be in need of it because of increase in demand. You require another building, more machinery. So now there is a problem because it will increase the cost. Okay, now you have to buy it again and it might be more costly. So this could be one of the disadvantages there. But what is the advantage? Again, you do not need to pay it back, okay, because it is an internal source of finance right there. But you can arrange a reasonable amount of finance from it, which is not available in case of retained profit. In the paper, they might ask you a question that, okay, whether a business should use retained profits or sale of surplus assets as an option. So you might have to compare both of them. So one of the advantage over retained profit is that retained profit might not be sufficient for to finance some part of expenditure, especially capital expenditure, right? Because capital expenditures normally require a large amount, or retained profit might not be available at all if it's a new business. But in case of surplus assets, you can actually raise a reasonable amount there, and you can finance your capital expenditure as well, right? So this is an advantage and a superiority over retained profit as a source of finance. All right, so moving onwards, selling stocks. So you know what is a stock? Anybody? What is a stock? Amna and Manha. Any idea?
So stock is the stuff like the products we have,
All
or
right.
the
Okay, products you have. Okay, all right. Now the name which is used for stock is inventory, right? But still in the exam they are actually using this word in bracket stock, huh? So that students get familiar with that. That now the new term for stocks is inventory. Okay, now inventory can be of many types, right? Okay, it can be in the form of raw material. If let's say you are running a manufacturing concern, right, and you will be using that raw material in the production process, this is also an inventory. It can be in the form of work in progress as well. That there are some of the products which are half done. Okay, you have worked on it, but still they are not complete. Okay, so you can keep it in an inventory as well. That okay, further processes will be performed on them the next day or maybe the next week rather. This is also in your inventory, and then there's an inventory of finished goods as well. Okay, so those items which are available for sale, but right now there is no demand. Okay, so you can put it in inventory as well. So all types of goods, they are part of inventory. Either it is a raw material or work in progress, those products which are half finished, half completed or half done, and then finished products which can be bought by the final consumer as well. So for example, so you know that finished goods are there, we understand the purpose of finished goods is to sell. Okay, we understand. But what about raw material? If you are having raw material and right now you are not using it, why? Because not enough demand is there, so you are not producing much to use that raw material which is there in your stock. So it is better to sell it.
Save it. So, but
Yeah,
raw materials aren't our inventory, right? Because we are not like, like we did not make a finished product out of it.
yeah, okay, all right. Yeah, that's right. So in that case, raw material will be your inventory. Okay, that's fine. Okay, and you will be selling it because you know that this raw material is not gonna use in the near future. So what is the purpose of holding that inventory if you are not using it? Because you are just your cash is tied up over there, right? So there is an opportunity cost there as well that you can use that money somewhere else for a better purpose. Right now, you are just holding it. That's it. And you know that raw material actually gets deteriorated as well with the passage of time. It may lose its shape as well. It may not remain fresh as well. It can get damaged as well. So while lying in the warehouse. So that's why if you think that it's not going to use in the production process in the near future, so better to sell it. So if it's not the only advantage that you will get a certain amount of money to be used to finance your expenditure. The other advantage is that there is a better purpose of using your cash. And otherwise, there will be a wastage of raw material as well. That old stock of raw material now you won't be able to use it for the next batch of production because now it's not that fresh. So this is possible. So better to sell it, get the cash, and use it somewhere else. You can buy raw material after some time as well when you need it. Okay, so we are done with it as well. So then we have owner savings. And what is it? And can you tell me this option is not available for every type of business? Can you tell me that which type of businesses do not have this option, that is owner savings? Any idea? No idea? All right, it's fine if you're not sure about it. Owner savings means that owner's personal money. Like for example, I run a business as a sole trader, and I have some amount in a bank as well to meet my own needs, own personal needs, right? So if I think that the business is in financial crisis, I can use that money as well, right? So I can say, all right, I will restrict my household expenditure, okay, and I'll be using that money which is available for my personal use. I'll be using it for my business. So this option is also available. This is readily available, you know that, and you do not need to pay it back as well. But there is a huge disadvantage there. Do you know what is that? Of using that option, and that's why it is in red color. It's very dangerous. No idea? Hamna? Manha? All right. So, okay, is my voice clear now? Are you getting it? Hello? Manha and Hamna? Is my voice clear? All right. So let me just get to it. Owner saving now. The greatest disadvantage is that
Sir, I can't
yeah,
hear you.
uh, you can't hear me now still.
Sir, me and Manha both can't hear you.
Or how is it possible? I'm talking and my net is also working. Still, my voice cannot be heard
Sir,
by.
we'll join again because we cannot hear you.
All right, okay, fine.